Bitcoin, gold, and oil have been all struggling so far this week, but is the decline overdone? Is it time for a rebound? Well, with the core PC price index dropping this Friday and geopolitical and tariff threats heating up, things could get interesting in the coming sessions. So let's have a look at what the technical signals suggest. And looking first at Bitcoin in the daily chart, we can see that Bitcoin plummeted to the lowest level since November. But encouragingly, it found support around its 200-day moving average and the support trend line coming from September. And given the oversold signals coming from the stochastic oscillator, and considering the fact that the price closed significantly below the lower Bollinger Band, that is increasing the odds for a rebound. So I would like to see a clear close above this constraining falling trend line around the 88,630 level before targeting the next barrier seen between the 23.6% Fibonacci retracement of this uplook over here and the 20-day moving average. The area is around the 94,370 mark, and that could cause some consolidation ahead of the 98,000 territory where this tentative resistance trend line is located. Further up, I expect another rally above the 100,000 level, and probably this constraining ascending trend line seen around 102,700 could be the next barrier in this case. Now, in the bear scenario where the price closes below the 200-day moving average, seen near 864, then the 50% Fibonacci mark of 78,580 level could protect the market from a steeper decline towards the 61.8% Fibonacci of 71,660. And interestingly, we can see that there is another tentative support trend line passing through this area, so that could be another important region to watch. Now turning to gold, gold has been also under pressure so far this week. It's currently trying to find support around its 20-day moving average after breaking below this triangle and exiting this bullish channel over here, which sent bearish signals into the market. Well, if we look at the technical indicators, we can see that they are all sloping downwards, and if we look at the RSI, this has yet to reach, this is still far above oversold levels. The stochastic oscillator has just turned lower, and the MACD is gradually easing below its red signal line, which suggests that downside pressures may persist. So if the 20-day moving average fails to hold, and there is also a bearish break below the 23.6% Fibonacci retracement of this upleg at 2865, then we could see a steeper decline towards the 38.2% Fibonacci of 2812. The 2790 level could be also interesting to watch, could be also important because this is where the price peaked back in October, so that could attract attention ahead of the 20-day moving average, which is currently near the 50% Fibonacci of 2770, and while lower than that, I expect another interesting battle to take place around this longer-term support trend line, which currently coincides with the 61.8% Fibonacci of 2720. Break below this territory could worsen the medium-term outlook and could send stronger bearish signals. Now, in the event, in the positive case that the price rebounds near its 20-day moving average, currently seen at 2890, then I expect another key battle to take place between 2950 and 2960, where the price hit its all-time high a couple of sessions ago. If we successfully surpass this, then the path would clear for the 3000 psychological mark, while higher than that, I expect another exciting rally towards the 3100 level, where this resistance trend line over here is placed. And finally, looking at WTI oil futures, well, oil prices have been trending to the downside over the past 6 weeks. But looking at the daily chart, you can see that there is an interesting support developing around the 6,800, around the 68.50 level, where this ascending trend line comes from September is located. The price pivoted around this line back in December as well, and then an impressive rally followed towards the 79.36 level. So it will be quite interesting to see whether the price can repeat such a rally around this, can set a strong foothold around this trend line and face a significant rally as it faced back in December. Well, if we look at the technical indicators, there is little optimism for a rebound as the RSI is still below 50, the MACD is below its red signal line and within the negative area, and the stochastics keep sloping downwards. They have yet to pivot within the oversold region. So although there are some signs of an oversold market, the bias is still skewed to the downside. Downside movements are more likely than upside ones. So it would be interesting. It will be quite interesting to see if the 68.50 level will manage to support the market. If it does, if we see a rebound here, then the 70 mark may attempt to block upside movements around the 23.6% Fibonacci retracement of this down leg over here. Then above that, this broken support trend line and the 20-day moving average may also ease upside movements near 71.40 ahead of the 50 and 200-day moving averages seen between 72.60 and 73.15. I would like to see a clear, sustainable move above these lines and beyond this longer-term resistance trend line coming from April 2024 in order to target the 75.20 territory, which capped upside movements back in January and at the start of this month. So that's everything I wanted to share with you guys. Thank you for watching. If you like my video, please subscribe to this channel. We will be back next week for more technical analysis. Thank you for watching and see you next week.